First of all, stock of the day, and continuing that theme, well, we're going to take a look at Nvidia, who only in the last couple of hours have reported second quarter profits, $446.75 billion USM revenue. The chips developer now forecasts third quarter revenue above Wall Street estimates, helped by robust demand for its AI chips from cloud providers. And the revenue forecast $54 billion in the third quarter. Its shares fell 2.5% in extended trade as its on-hold China business clouded the future a bit. So what do the team think of Nvidia? Mark Moreland, what do you think?
I thought it was a fabulous result. Yeah. The thing is, the market's become a bit unrealistic because they expect them to keep increasing how far they shoot the lights out and how much they overperform what they've given guidance for, or what the market thinks, which is a bit ridiculous. But the bottom line, if you look at it, because
it was bang on forecast, wasn't it?
Well, it was slightly above still. Yeah. And it's got like the 56% year-on-year data center revenue growth. 98% revenue growth in network revenue. That's a big one actually, because that's 7.3 billion now. Yeah. Now people don't realise how big a deal this is. This is Nvidia providing all the interconnect within the AI factories to be able to make all the machines work as one. Right. And they own this. Right. This whole area, and that is going to be a massive revenue in the future. Right. And Jensen said a few years ago with the InfiniBand and so on that he thought that the revenue from networking could be as big as they make out of chips and prices eventually. Right. Anyway. Okay. And the other ones were...
So they're a big data centre play, in other words. Well, is that in plain language for us?
Oh, yeah, I suppose.
Yeah. So they not... Because everyone thinks they just produce chips. Which they don't.
No. They provide the whole infrastructure with all the software, the communication. And that's the problem. When people talk about ASICs, which is an application-specific chip that Google and Microsoft and are all developing, they're to do specific things. Yeah. Right? Whereas NVIDIA's GPUs are more general. But when you look at the whole ecosystem, though, it's not just about making a better chip. Let's say you can. Let's say you can design a better chip than NVIDIA. We'll see. But if they can, then that alone doesn't solve your problems, because you've still got to make all this work in concert with all the other compute and all the applications. So it's so complicated. So their automotive business is growing. It's only 560 million at the moment, up 69%. And this is all to do with autonomous driving. He's got a new product called Jensen Thor, which is it's 10x improvement on their physical AI brain, if you like. You have the compute for it. Yep. And they've actually signed up everybody except Elon Musk and Tesla, because Tesla's doing their own thing. So Tesla's going to be successful anyway, but virtually everybody else is going Nvidia. So this is a major growth area for them down the road. So when robotics come in, he's positioning very much to be the brains of all everything to do with humanoid robots. It's going to be a massive area.
Right.
Very big. This is all new for Nvidia.
Okay. Look at the share price though. Mm-hmm. It's had a terrific run. Have you missed the run?
It's had a good run. I'm a happy shareholder.
Right.
It's on about a 50-ish PE, I think, roughly, which is not. You'd argue it's not expensive.
It's less than that, I think.
Is it less than that?
Yeah, forward PE is 41.
Okay, that's not bad.
Right.
Yeah. And I don't think you've missed anything. And the other thing that's happened is what Jensen is showing is the extension now with sovereign AI, which next year they're going to get 20 billion from governments. Yep. Like Saudi Arabia, UK's committed, Europe's committed another 20 billion. All to buy NVIDIA chips and so on. These are all expansions. At the moment, it's all been about the big four hyperscalers, which are now spending 600 billion between them. But so he's saying that by the end of the decade, it'll be between $3 and $4 trillion, the target market for them. Wow. So that's like 50% a year compound or something going forward. Right. So therefore, if you accept that, let's say that's right, it's cheap.
Right. Okay. So you'd have it as a buy.
I think so.
Yeah.
Okay. Look, a slightly convoluted answer, because I'm very concerned about seasonal weakness, and obviously this is a huge weighting in the indexes, and it doesn't really matter on the upside or the downside, as we've seen with CBA on the upside. If a certain amount of capital has got to fit through a very tiny door, you get overextensions, and the broader market's throwing up a load of general red flags on valuation. September's the worst month for the S&P. Traditionally, it's the only month that's negative more than half the time. So I'm broadly concerned about that and the price action today, because they beat, and that wasn't including the H20 chips to China revenue. So so they would have smashed it if that had started really. So I mean that it's actually a much bigger beat. They beat without that, and all the analysts were including having that in there.
Right.
So I think it was better than what people are saying, but they were very strong in the earnings call afterwards about, we're not going to be an Intel. If the government tries to buy a stake in our company, we're going to legally challenge it. Right. And with this H20 chip export, Trump just at the last minute chucked in we want 15% of what you sell. And I think, and then 4 days ago, Nvidia ordered the halt to manufacturing in the H20 chips. So I think there's going to be a further negotiation here with obviously the US government about this, because they don't want the government to buy a stake in them, and they probably just don't want to pay 15% of, a way of
It's pretty cynical. For Trump, it's like...
Oh yeah, exactly. So, and I mean that market's something like a $50 billion annual market as well. So.
So he wants to put a 15% license fee or whatever you like on.
But only the US government gets, So
how's that different to the Queensland government putting separate royalties on coal?
Well, it's
yeah, exactly. So
same thing.
Exactly the same thing.
Yeah,
and it's a very bad trend, by the way. If you start getting this going along. What you're doing is picking out industries and charging them.
It's not an industry; it's a company. Their point, like you can't just go, "Oh, you get it, but you don't." That's not cool. Just because you're successful.
Solves your budget problem.
Yeah, well, I mean, getting interest rates down 2% solves the budget problem a hell of a lot more than that. But which is what he's going to end up, forcing the Fed to do. But look, I stupidly said about 2 years ago this would be the pin-up boy for the AI bubble, and I cop a lot of crap on Twitter because of that. But we changed our tune, particularly for that ecosystem in the data centers, because I was comparing it to Cisco, and they had one product, revenue kept growing, but the share price, because they had nothing new coming out. And Jensen actually, it was an earnings call a couple of years ago, and he said, we don't want to be another Cisco, and I went and investigated further into why. And that ecosystem makes all of their customers almost they just can't do without them. Once they're in, they are so stuck. It is unbelievable. So
trapdoor moat.
It's a definite trapdoor. I've heard trapdoor moat, but that's exactly what it is. So we bought at the time it was about 120, but we bought on the carry trade dip, and we bought in April as well. So we're long at the moment. But we'd be trimming here at this point, but potentially only on the fact that we're expecting seasonal weakness, and I don't like the price action. I'd like to see if it can recover tonight, but if it's weak for the next couple of days, I think we've had some pretty poor price action on some really good results over there lately. So it's
you
more
take profits.
We are potentially trimming, but on any major market dip, this is number one or number two in the list of things to buy on a dip.
Right.
And it's great if you can buy on a dip. I don't disagree with that either.
If you own it, if you don't own it right now, with the dollar cost averaging thing, buy some, maybe a fifth of what.
Dollar cost averaging is a good idea, because then do it over time, and then you pick up, because you can't. It's very hard to pick the.
It's almost impossible to pick and it's in the middle of the night. When you got to put your orders in and things.
All right, so it's shooting. Okay, I'm going to say shooting the lights out. Speaking about lights, what's it going to do for power grids around the world, and Nvidia and AI chips and AI data centers?
Every release they come out with is way more efficient.
Right.
So they've improved it by about 1 million times now.
Right.
So you're getting more power for less electricity, but we're still growing massively.
Yeah.
So we need nuclear and gas and everything. You need everything. Which is what the US is doing, and Trump's totally unleashed that. We here don't even talk about it. We just pretend that we know what we're doing. We have no idea.
Well, I mean, we just did a structured investment around around data center build, rapid expansion, and we had a couple of, power and water are two of the biggest things. Water for cooling.
Absolutely.
And cooling solutions, they consume an enormous, and they're generally the data centers in the middle of nowhere, so transporting it there, etc. There's a couple of good US picks in the small modular reactor space, which is probably 4 or 5 years away. Oklo's a very good one, because they've done a deal with Liberty Gas where they roll out.
Anyone that's listed, I think.
Yes, no, I think there's a couple that are listed, but they're part of a bigger organisation. But they essentially will provide, Liberty will provide gas so they can roll out all their software and power management infrastructure. And then when the SMRs are ready, and they're the size of a shipping container.
Yeah.
And they last, but it's like, I think the amount of chips they're going to sell, Nvidia is going to sell next year, is like adding another medium-sized city like Phoenix to the grid every single year.
Yeah.
And I mean, they go globally, obviously,
Yeah.
but like we're talking about, a city of 10 or 15 million people. Like, they're incredibly
So
big.
how do you meet your
Well, that's what coal
carbs,
as well.
carbon?
You're not. There's no way.
And sort of Nvidia's leading the electrification of the world.
Yeah, and I mean, it'll be good
Basically.
for ASX as well because we're going to need. It's got to be wired. So it's going to be great for copper prices as well. So I think there'll be key resources where the ASX constituents really benefit.
The amount of rebar goes into these data centres is massive.
Yep.
Right.
So there's a lot of. It's good for us.
Yeah, it is very good. Yeah, and particularly if you get China property recovery meeting AI infrastructure build, then you're going to get short squeezes and supply gaps all over the place.
Okay. All right. That's our stock of the day. We spent a fair bit of time on it, but talk about one of the world's biggest company, and it accounts for 7% of the S&P 500 or something.
4.4 trillion.
Yeah, about
that's
that.
One of the problems
extraordinary.
with it, because it's the law of big numbers. I think it'll be 10 trillion for sure before the end of the decade.
Yeah.
But that's still only 1.5 times what it is now.
Yeah.
So if you think of it that way, it's still good.
It's
by the
just
way.
mind-boggling.
Could be 10 trillion in 3 years.
It
if
could
they
be
print
10
money
trillion
again.
in 2 years.
They're mind-boggling numbers.